Picture this. You wake up, grab your morning coffee, and check your email. Your heart sinks as you see a notification from your HOA. Your monthly fees, once a manageable $500, have now tripled overnight to $1,500. Panic sets in. You scramble to check your bank account, your mortgage statement, and then, bam, another email hits your inbox. A special assessment. Thousands more dollars due immediately. This isn't some dystopian nightmare. This is reality for thousands of Florida condo owners right now. Retirees on fixed incomes, families, and everyday people are being forced to make impossible choices. Sell their homes at a loss, drain their life savings, or risk foreclosure. And it's all because of skyrocketing HOA fees, sudden special assessments, and a shocking 500% surge in property liquidations. Could you handle a sudden HOA fee hike like this? Drop a comment below and let me know. So, what's causing this HOA meltdown? Is this the beginning of a larger housing market collapse? By the end of this video, you'll understand exactly what's going on and whether you should buy, sell, or run from Florida real estate. If you live in a Florida condo or are thinking about buying one, you need to brace yourself for the financial storm that's brewing. After the tragic Surfside condo collapse in 2021, Florida lawmakers passed strict new safety regulations. These laws require older buildings to undergo expensive structural inspections, repairs, and, here's the kicker, fully funded reserve accounts by 2025. For years, many condo associations kept fees artificially low by underfunding reserves. But now, the bill is due, and homeowners are paying the price, literally. In some communities, HOA fees have doubled, tripled, or even quadrupled in a matter of months. What used to cost a few $100s a month is now well over $1,000, and that's just the tip of the iceberg. Some homeowners are being hit with special assessments ranging from $10,000 to $100,000 per unit to cover emergency repairs. This isn't just a financial inconvenience, it's a full-blown crisis. Thousands of homeowners are being forced to make a gut-wrenching decision: stay and struggle to make ends meet or sell before it's too late. For retirees and middle-class families, these sudden cost increases are nothing short of devastating. Many bought their homes expecting predictable fixed expenses, only to find themselves drowning in unplanned financial burdens. And here's the worst part: if they try to sell, they may be trapped. Older condos with high HOA fees are flooding the market, pushing prices down. Buyers are wary of properties with unstable financials, meaning sellers must slash prices just to attract interest. Some homeowners are selling at massive losses, while others, unable to find buyers, are simply walking away, triggering a wave of foreclosures. This isn't just an isolated issue, it's a growing crisis. The combination of rising HOA fees, falling property values, and skyrocketing insurance costs is putting Florida's housing market under extreme pressure. And if the trend continues, the ripple effects could be catastrophic. Florida's HOA crisis didn't happen overnight. It's the result of years of financial mismanagement combined with a wave of new legislation meant to improve building safety. After the Surfside condo collapse in 2021, lawmakers took action to prevent future disasters. The Building Safety Act now requires that all condos over 30 years old undergo structural inspections and that HOAs maintain fully funded reserves by 2025. This means associations that previously put off repairs or operated with underfunded reserves are now scrambling to comply. The problem? Many HOAs weren't financially prepared for this shift. Rather than gradually raising fees over time, they're being forced to hit homeowners with massive special assessments, one-time payments that can reach tens of thousands of dollars per unit. Some owners are getting blindsided with sudden bills of $20,000, $50,000, or even $100,000. This has created a financial shockwave. Homeowners who can't afford these payments are left with few options: sell at a loss, drain their savings, or face foreclosure. And as more people try to escape their unaffordable homes, the Florida real estate market is seeing a flood of desperate sellers. If sky-high HOA fees weren't enough, insurance costs are making things even worse. Florida's insurance market is in crisis mode, with major companies either pulling out of the state or raising premiums to unsustainable levels. Hurricanes, flooding, and other extreme weather events have led to record-breaking payouts from insurers. In response, companies are either exiting Florida entirely or significantly increasing rates. Some condo owners have seen their insurance premiums double or even triple in the past 2 years. Here's the catch. In many condo associations, insurance is bundled into HOA fees. So as insurance costs rise, so do HOA dues, creating an even bigger burden on homeowners. Some associations are struggling to find insurers willing to cover them at all, forcing them to turn to the state-run Citizens Property Insurance, which is often more expensive and offers less coverage. For homeowners, this means an unpredictable and rapidly rising financial burden. For buyers, it's a major red flag. Why invest in a property where insurance rates and HOA fees could continue spiraling out of control? This uncertainty is driving down demand for Florida condos, adding to the growing inventory of unsold units. The result of these financial pressures? A massive wave of forced sales and liquidations across Florida's condo market. In some parts of the state, distressed condo listings have surged by 500% in just a year. Many of these units are in older buildings where fees have skyrocketed due to safety regulations, insurance hikes, and underfunded reserves. Sellers, eager to get out before things get worse, are slashing prices, sometimes selling for 30% to 50% less than what they paid just a few years ago. But here's where it gets worse. Demand isn't keeping up with supply. Investors and potential buyers are becoming wary of older Florida condos, knowing that many of them come with hidden financial risks. Lenders, too, are tightening their requirements for condo purchases, making it harder for buyers to secure mortgages in buildings with financial instability. This imbalance is pushing Florida's condo market into dangerous territory. If fees and insurance costs continue rising, more owners will be forced to sell, increasing supply. If demand remains weak, prices will continue to fall, trapping homeowners in properties they can't sell without taking a loss. It's a vicious cycle, and unless something changes, it could push parts of Florida's housing market into freefall. Florida's condo crisis isn't just a local issue. It's a warning sign for other states with aging buildings and rising insurance costs. If these trends continue, we could see similar HOA collapses in markets like California, New York, and coastal Texas. The Florida HOA crisis is already in motion, and whether you're a homeowner, prospective buyer, or investor, you need to be prepared. With rising fees, special assessments, and insurance hikes pushing more people to sell, knowing how to navigate this landscape is crucial. If you currently own a condo in Florida, taking action now could mean the difference between financial stability and a costly mistake. Many homeowners are shocked when they receive their HOA's latest budget, only to realize reserves are dangerously underfunded. If reserves are below 50%, a special assessment is almost inevitable. The time to review your HOA's financial health is before that letter arrives, not after. Owners who are caught off guard by unexpected fees often find themselves scrambling to cover costs, dipping into savings, or worse, facing foreclosure. Even if your HOA hasn't raised fees yet, don't assume you're safe. Fees are climbing across the state, and ignoring the trend could leave you unprepared. Some condo owners are watching their monthly dues double in real time, forcing them to either cut back elsewhere or sell before things get worse. Staying ahead of these changes means building a financial cushion now, not when the next increase hits. For those who aren't paying close attention, the shock of sudden fee hikes can feel like a financial ambush. That's why attending HOA meetings and demanding transparency is more important than ever. Too many homeowners only realize their community's financial instability after the damage is done. By staying involved, you can spot red flags early and make informed decisions before assessments spiral out of control. But for some, no amount of preparation will make up for an HOA that's already in trouble. If your community is financially unstable and your fees are climbing fast, selling sooner rather than later could save you from a bigger loss down the road. Owners who hesitate are already seeing property values decline, making it harder to exit without taking a financial hit. The key is knowing when to cut your losses and doing it before the market shifts further against you. For those considering buying into an HOA community, now is the time for extreme caution. Many buyers are tempted by falling prices, but a cheap condo with high fees is no bargain. Before making any purchase, digging into an HOA's financial statements is essential. If reserves are underfunded and fee increases are a regular occurrence, that's a clear warning sign that the building is headed for trouble. Would you buy a condo in Florida right now, or are the risks too high? Let me know in the comments and drop a like. Older condos in particular come with significant risks. Many were built decades ago when regulations were looser, and today they're facing multi-million-dollar repairs just to stay compliant. Unless a building has strong reserves, owners will be forced to cover these costs through assessments and fee hikes. Some buyers, eager to grab what looks like a good deal, only realize too late that they've stepped into a financial trap. Even newer buildings aren't immune from the crisis. As insurance premiums skyrocket, some buyers are finding out after purchase that their monthly costs are far higher than expected. In some cases, lenders are even refusing to approve mortgages in financially unstable buildings, making it harder to resell the property later. Before signing anything, working with an insurance agent to get a realistic estimate of ongoing costs could save you thousands. Despite all these risks, there are opportunities for smart buyers. With desperate sellers flooding the market, negotiating aggressively is now an option. Some investors are successfully securing properties well below market value. But the key is patience. Many buyers are staying on the sidelines, waiting for prices to fall even further before making a move. Jumping in too soon, without fully understanding the financial obligations, could turn what seems like a smart purchase into a financial disaster. Ignoring these warning signs could leave both homeowners and buyers trapped in a depreciating asset with unmanageable costs. If you're already struggling to afford HOA fees, or you're unsure whether to buy now, the best move might be to pause and reassess before making any major decisions. Florida's condo market is at a breaking point. Rising HOA fees, skyrocketing insurance costs, and unexpected special assessments are squeezing homeowners, forcing many to sell at a loss. The result? A flood of distressed properties hitting the market, creating a vicious cycle of falling prices and financial instability. Some experts believe this is just the beginning. If fees and assessments continue to climb, more homeowners will be pushed to the brink. And if demand keeps dropping due to wary buyers and stricter lending policies, we could see an even bigger wave of liquidations. What started as a financial strain for a few communities could soon turn into a statewide housing crisis. So, what does this mean for you? If you're a homeowner, now is the time to get ahead of the crisis. Review your HOA's finances, prepare for rising fees, and consider your options before it's too late. If you're a buyer, don't rush into a deal just because prices seem to be falling. Look beyond the sticker price and understand the long-term costs before making any commitments. The Florida real estate market is shifting fast, and those who aren't paying attention could get caught in the storm. The question now is, do you think the worst is still ahead, or is this just another market correction? Let me know your thoughts in the comments below. If you liked this video, don't forget to hit the like button and subscribe for more updates on the housing market. Your support helps us bring you the latest insights and trends.